Hello and welcome to another episode of Casual Friday. I'm here with the Duck. We're going to discuss the market, the upcoming monthly close, and all sorts of interesting news. Before we do, leave a like on this video if you enjoy Casual Friday, and the show is brought to you by Woo. Links available in the description below. We'll have more news soon as the exchange is going through a revamp of sorts, which will be quite interesting. Less centralization, better execution, designated market maker program, USDT-based rebates, and all the competitive stuff that we've been asking for a while. So keep your eyes peeled for that. So let's get straight into it. Don, I want to start with a tweet of yours, which is becoming a bit of a tradition, I think, on this show, for better or for worse. So this is one regarding, well, this is your most recent tweet, actually, which reads, "People in my comments, you've been great for the last year, but now you've lost it. I don't know the reason why I bought 16K is the exact same reason why I sold 30.7K. Bad news was not taking us lower, which is bullish. Now good news is not pushing us up, which is bearish, simple." And that was controversial, apparently, for reasons that aren't entirely clear to me. But I'm wondering, in terms of shedding light on this, given this almost sort of sentiment-oriented approach, what would invalidate the current view? Is it good news having positive market impact? Is it getting bad news that doesn't have market impact? Is it both? Neither? So how does this view shift, or what's the falsifiability of this position?
I mean, if price started doing something good without actually, like if the S&P doesn't go up, but Bitcoin does, for example, like
Right.
that would be a clear, like, sign that something's changed, because what's happening right now is basically we get good news, we get a push up, and that's immediately faded, and we start trading lower. And the S&P goes up, and Bitcoin kind of like gets pulled along, and then the moment the S&P retraces just like 10% of what it went up, Bitcoin is back where it started from, right? And that's not it. So if that changes, or if the market structure in general changes, like the weekly and daily structure kind of looks shitty right now. If that changes, I'm willing to kind of just start bidding again. So if we start trading above 30K, that just starts looking much, much better. Or if we kind of make sure that this weekly doesn't close as is right now, because right now it's kind of like struggling. That would be enough for me to be not as bearish anymore. But until that happens, the only thing that I've been seeing is good news have negative price impact, and that's usually not a good thing. We've had, and this is why, like, I tweeted, because people are like, "Oh, you're so biased," whatever. I don't think that's necessarily the case for me. I've the exact same, and this is what I said in the tweet too. Like, I had the exact same reasons why I got into the trade in the first place that I used to get out of it, right? Like, it's one-to-one the same thing. Now that doesn't mean it has to play out the same way, right? I'm not saying this is 100% guaranteed. Bet your life on it. But this is something that I actually really like when I get into swing term positions. I get in for a reason, and if that reason stops or like doesn't exist anymore, I just get out. And in this case, that made price double, and I'm more than happy with that. So now it's stopped. Like, the good news, like basically we had bad news, price didn't go down, then we rallied on no news at all, and then the exact same thing happened, just in inverse, right? Like, good news and price didn't react / push down. So here we are. I don't know if this seems kind of like the simplest thing in trading, right? Like, this is the most obvious kind of indication how strong or weak the market is that everyone can understand. And I don't know why it's so kind of like why people are arguing about it so much, and why people are like, "Oh, you're so biased." If anything, I think it's the opposite, right? Like, it's just not being as biased as I otherwise would be.
Yeah, I think all of that is fair. It's also weird to levy a charge of bias on someone who bought 15 and sold 30. It's like a very, I don't know. There's a lot of real bias on Twitter, right? And even from speculation-oriented accounts who claim not to be, you'll just see that their like bullish scenarios are always 10x, and then the bearish one is like, oh, we just chop. And it works the other way around as well, right? Like, where their bullish scenario is like, okay, it'll go from 28.9 to 29.2, but the bearish one is going to 12K. They're like, oh,
Yes.
I'm not biased. I trade both sides of the market. It's like, I'm not sure that's quite what you're doing. So yeah, I don't think the bias argument is a particularly good one. It's also quite ironic because I think in either last week's Casual Friday or the week before that, we were discussing how one of the rare points of consensus among most traders is the whole, gauging the strength of the market based on its reaction to news events type of thing. That almost that seems like a rare case of well-established wisdom. And so to be cynical about that out of everything that's floating around, I think is perhaps unwise, or certainly there are better targets for your cynicism and skepticism when it comes to trading approaches.
And I think like this can obviously fail, right? It's not bulletproof, but it's like a good part of what makes my trade happen. Basically, like if I have that whole the news are bearish, but price isn't going down, and we're in an area of support, we're in an area of interest, and sentiment is really bad, like that's almost always going to make me take trades, right? Like bullish ones. So it's just I look for these kind of things and I use them in my framework to kind of make some somewhat educated guesses on where the market is going to go. It's not always going to be right, but it gives at least a little bit of an edge. And yeah, I like to use that because people always, they either are like, hey, you're being biased, or they take it as gospel, right? They're like, okay, this has to happen now given its worked before. But that's never the case, right? Like just because something worked before doesn't mean it has to happen again. It just means in this case, for example, that the odds of it happening are higher than not, or than usual, and that's enough for me, right? That's kind of how trading, like what trading is. You just look for the points in time where you have the odds in your favor, at least a little bit, and then you can take advantage of it, and then you try to protect yourself with risk management, and that's it. Like in its simplest form, that's how you trade, right? You try to not blow up, and you try to take advantage of moments that just kind of make sense. But yeah, for some reason, especially yesterday, people were very upset, but it is what it is.
I think when you say for some reason, I can at least speculate as to part of it in terms of the cause. I've noticed in general, people have an sort of analogy towards really simple stuff. Because in their mind, they've probably tried very complex stuff and have struggled to make money. So it's almost insulting the idea that something simple could make money if complex stuff that they've poured more time, resources, and expertise into doesn't make money. That's a trend I see in general. I also see it applying to TA as a whole. Like the reason a lot of people write it off from the outset without any investigation whatsoever, and usually by using almost bad faith examples of like TradingView, mega cup and handle, weird chart pattern shit versus someone just like looking at levels, is because they don't want to sort of intellectually concede that you can make money using really simple stuff. Because that would mean all the time and resources spent on really complex strategies, which may or may not have been profitable, was perhaps not the best way of spending their time. So I think a lot of people tend to over-rationalize and intellectualize markets like it's this puzzle meant to be solved, instead of just looking for the minimum effective dose of complexity in terms of what works and then working on refining that. At least that's my speculation and observation. But I don't see a reason to be cynical or suspicious of simple stuff. If anything, you want to start with the simple stuff so you're not caught off guard by any weird sort of interaction effects between all the indicators you're using or signals and, you know, whatever it is that puts you into a trade and, you know, makes you act. You want to build from the ground up, I feel like. I think in general, you should lean towards simple stuff that you know very well and can manage and control, and then add complexity as needed versus just writing off the really simple stuff, saying, nah, this doesn't on its face seem complicated enough, so I'm not going to investigate it. And I need to start from the top, essentially. I just don't think that's the best way to do it.
No, especially given like how are you going to find out whether you need to fix some part of it, right? Like if you have 10 variables in your trading,
yes,
and you can kind of tell that it's not working, like how the fuck do you know which part of it is going to work and which part isn't, right? So like I'd like the advice just start simple. Like you do like 1, 2, 3 things, right? You nail those down, you can figure out like, okay, this is helping me, this is not, and then you can stick with those and add on top, right? Because then you know, okay, these things are helping me in my decision making. I understand them perfectly. I know when to use them and how to use them, and now I can add another thing, see if I can make that work into like in my framework, and then go from there, right? And you can make it as complicated as you want, but you wouldn't start like doing maths by learning multiplications before you've learned how to add, right? Like just doesn't make any sense. And like you said, I think people overcomplicate it from the get-go, and then they're just very frustrated, which I totally get, right? Like if you do it super complicated stuff right from the start, you're not going to understand, and you're going to be rightfully frustrated with your results, especially given that you're not going to have any any way to fix anything in that mess that you've created, because you don't even know what's wrong to begin with.
Yeah, it's tricky because you have like more independent variables to manage, but also these known and unknown interaction effects between those variables to manage as well. And it just turns into a disaster very quickly. Or alternatively, we are just dumb, coping, seething, lucky TA tards who don't know how markets work. Also completely possible. The jury's out on that one, Don.
I've just like, it's just been luck for the last 6 years.
Yes. Blow up coming soon. Let's talk about the chart to start. So we've got the monthly close coming up in 3 days. I think this is going to be a bit of a nothing burger as far as the monthly goes. If it closes like this, because it hasn't really done anything. I think we had an important discussion on one of the episodes towards the start of the month as to whether this kind of red down candle from May would be a valid level of support for BTC. And I think the argument that you made was essentially it could be if the market pushed far enough away from it, right? So if this month, for example, were green and sort of broke above 30K and sort of was trading mid 30s or even higher, then this cluster would be a valid level of support. But because we had kind of a lackluster, well, we had the breakout month last month, and then this month is just kind of pullbacky and didn't really offer that type of continuation, I presume that the argument still stands that that's not a monthly level of support that you'd be putting much weight to. Is that broadly fair?
Yeah. I mean, I would say it's a monthly level of support if you really want it to be, but I don't think it's something that I would bet money on. Especially like something that I could see myself do, right, is if we close at this level, which we might, right? It's all like we're already kind of closing in on month's end, right? And there's only really a weekend between it.
Yes.
If we close here and then wick low next month, right? And I see some strength at like 27 or whatever, there's some lower daily supports like at 27, 28. Then I might start considering this being a support, right? As in, like, we kind of lose the support, people are freaked out, and then we actually do climb back above it towards next month's end. That would be fine by me, but I wouldn't necessarily want to be like, oh, it closed that support, I'm going to long into the monthly open. Most definitely not.
Sure. Okay. I think the only other relevant thing on the monthly is the same old story of just failing previous month's high and failing April's high, which unfortunately all point towards the absence of a breakout for the time being. Monthly time frame, useful stuff is the failure at the highs. If you're going to go discount shopping on what could be monthly support, 27 / the lower boundary seems like a better area than the upper boundary of 29. Do you think that's a fair summary?
Yeah, perfect.
Cool. Weekly time frame. This one is quite saucy. So you've got the single green boy cluster thing at 29.5-ish, right? I've seen that on your stream a lot. That is under some peril at the moment, given where, it's sort of Friday afternoon. We're currently trading below it. It could still end up rescuing the weekly close, but it sort of doesn't look how you'd want it to look. I was coping with a slightly lower level. So the weekly lower high of the 24th of April, which comes out at, let me just map it real quick. That's like 29.2. That was kind of the shallow pullback support that I think, I certainly discussed on Monday Markets. We probably covered it on Fridays as well, because it's pretty much in a similar area. Do you think a weekly close above there would be okay? Or is it all just too close to 30K to get excited?
Yeah, for me, it's too close. I think in general, like I don't mind that support at all. I think it's pretty valid. But I think for me personally, I would want to see a close back above 30.3K at least. Just basically clear the high that we set on the 10th / 17th of April, right? Like those that kind of reaction that we had, the bearish reaction, close back above there, and I'm down to consider all of the support. And then I didn't buy the support, but I'm buying basically a little bit higher up into the still available trend, right? Like that's okay for me. This is all like very, very close to just the highs in general. And given that we haven't gone up during good news seasons and we are not holding the most obvious support, I'm not willing to consider anything lower, really. So I'm just in the mode of, okay, I want to see this thing put in some strength. Otherwise, like if this doesn't show strength, like maybe this is just the top, right? Like so like the top before we have 6 months of down, that might end up at 20, 22, 23, whatever in that region where we just chop around. And I'm not willing to be in the market to get chopped up for 6 months, right? That's like, I'd just rather not. I'd rather miss out on $1,000 of price action than sit in a market that's going to chop up and down for 10K for the next 6 to 12 months. Like, that just doesn't seem too interesting to me. So I'm just kind of like, okay, strength or very, very deep pullback, which kind of takes it for me to 21K. Those are the only two areas that I'm really willing to make bets on, just because we've had a really good rally. The market doubled, and people keep telling me like, "Haha, you're so dumb. You're bearish after a double. Like, how is it possible that you say like Bitcoin is bearish?" I'm like, dude, this thing went from 70,000 towards 15,000, and now it's bounced at 2x, but it's still more than 50% below all-time high, right? This is a bearish trend, high time frame. It's just people just kind of lose sight of it. They just see the double that it did from the low. But if something goes down, like if you see an altcoin go down 90, 95%, right? If it doubles, it's still down 90%. And it's very similar here. It's just not as shitty as with altcoins. As in, this has shown extreme weakness in comparison to any other market, really. And now it's shown a little bit of an outsized bounce, but not even like percentage-wise from what we've reclaimed in this rally. It's actually laughable, right? If you compare it to the S&P, if you compare it to the NASDAQ, like we haven't even retraced 50% of this whole thing, like of this whole bear market, while the S&P is basically, I mean, it's almost at all-time high, right? Like that's very, very close. Bitcoin is very much struggling. And yeah, so for me, low or some strength, because technically this is a bearish retest of the 2021 top range, right? Like we were ranging between 32K and 60K.
Yeah.
And this is a bearish retest for now, right? Like we retested the range that we had there and we're getting rejected. And I don't really know why it's so controversial to be like, okay, this is where you risk off, because it just seems sensible, especially given that we've not been having the reaction that we had back in 2018, 2019, where we traded into the bearish retest area of 6K, right? And then just completely blasted through. It's a very different kind of trading environment right now, where we retested it and we're actually rounding out. We're not completely blasting through immediately. So yeah, I don't know. I think it makes sense to be a little bit cautious, see how this develops, give it at least like a little bit, like $1,000, $2,000, $3,000, where I'm just sidelined and just look at it before I make other moves in the market. I think that's pretty reasonable.
Yeah, I think that's fair. Also, I think part of the reason why participants, you sort of pointed out why, doubled and then people don't quite understand why I'm more averse at the range high. I think part of it's got to do with there's a sort of recency bias based on your crypto trading experience. So if you joined in 2021, that was like mega uptrend trending environment, right? If you joined in 2022, mega downtrend trending environment. So for a lot of participants coming in the last couple of years, they've actually never seen a non-one-sided, a market that wasn't completely one-sided. And so the idea that just kind of trading more level to level, even if it is high time frame, or chopping, or not trending in the same way that they're used to, kind of vertically up and all the way down, that's by definition new and something a lot of market participants haven't experienced. Doesn't mean they have to or they will, but just in terms of framing, I think that's where a lot of the confusion and novelty comes in, because there's a reasonable number of people who've been trading crypto for like 2 years and just genuinely never seen a boring and sideways market. Which is to their detriment, I think, on average anyway. Because markets really sort of, at least in principle, spend most of their time ranging rather than trending. But
yeah, as long as it's not the S&P.
As long as it's not the S&P, yeah, correct, up and to the right. Cool, I think that's interesting. I keep going back and forth on this. When I start looking at those sort of shallower levels that we discussed, 29-ish, that weekly lower high, whatever, Part of me wants to look for setups there, at least for short-term trades. I still think that's palatable. But then bigger picture, when I zoom out, I always have to ask myself, am I diddling in the middle, right? Because it feels like 30K is an extreme, or around 30K. And it also feels like 20K is an extreme, or around 20K. You know, it can give or take a couple of $1,000 on either side. And so if I'm starting to do business at like 29, 28, or whatever, bigger picture, I'm still kind of diddling in no man's land, right? Because the extremities are 30 and 20. And there are some good midpoint levels that we'll discuss on like the daily and so on. Closer towards like 25, 26, 27. But it feels like if 30K is going to be big resistance and I'm going to step in at 29, either I might as well wait for it to get above 30 to have real evidence of strength, or I'm just stepping in front of something that's just going to nuke through the high 20s. Because again, I always feel that fundamental friction between arguing that there's a chance that 30K is really good resistance, but let me go buy like 29.9 to use a hyperbolic example. But that's never sat particularly well with me. So I guess that's the current frame of mind. You did mention market structure when we started the show. Where do you think, rather I should say, why do you think that the mid 20s wouldn't be a reasonable spot for some sort of higher low? I think 28K basically on the weekly, that last green candle before the lower low, which then got blasted through on the ETF side. The other side of that candle is, the range low, if you will, is at 27 or 26.7 rather. I think if the market's strong, that could be a reasonable reaction area. I mean, even if it's not straight higher low into higher high, if the argument is that we're going to range before going higher, that seems like if you want to maintain some semblance of acceptable market structure, you sort of have to get it at the mid 20s. Do you care about that area at all? I mean, from a trading point of view, I think it's good, like short to medium term. But bigger picture sort of market structure implications still point towards closer to 30 and close to 20. But I'm keen to get your thoughts on this 26, 28 type level, because we have it in the newsletter as well, and it's obviously a closer support than the Duma Duck levels.
Yeah, I mean, I like it. And if this green candle that we had, right, the ETF, BlackRock ETF application candle that we had wasn't caused by those kind of news, right? Like, I would most definitely be looking for a reaction there. It's just, I'm asking myself, are there too many people that bought based on that whole ETF narrative that would get scared get completely scared out of their mind if we went back to 27, 26?
Right.
Like, would I kind of bail them out of their positions if I got back in there while they just mercilessly dump on me because they're scared out of their mind? And I think the answer to that is yes. I think there's a lot of people that just kind of bought because of the news. And if you start retracing news, people get very, very nervous very fast. And I think this is kind of, the market's been struggling to push below 30K, and that's one of the reasons why. Like, people are trying to defend it to make sure that that doesn't happen. If they win, right, cool. But if they fail, I think the whole move lower is going to be quite a bit more aggressive than you would expect otherwise, right? Like, if it's just price wise, if I just look at the chart, yes, I love that level. Like, I really like it. It's good support. It's a nice area if you look for a higher low. But if I put it into context and kind of think about the people that basically made this green candle happen and what their reaction is going to be if we start dumping significantly, it gets significantly harder to kind of buy that support. Because I think there's a bunch of basically news chasers that bought this thing that might even be underwater already, kind of buying in at 30K. I don't want to bail them out. If anything, I would want to buy when they get completely wrecked. So for me, it's a good level. It could be the higher low, right? But the chance that there's a bunch of people just in danger at those prices doesn't make it too appealing to me. But it could be wrong on that front. But then again, I think the difference between buying at 28K or 30K is marginal at best. And given that, like I said, a bunch of people could get liquidated / panic sell if we went anywhere close to like 26, 25, just makes it not as appealing. So I like a level, but it has caveats, which is basically I don't want to bail people out.
No central bank of duck as the lender of last resort. So technically you like it, but contextually you think if we start getting to those ETF news trader pain points, there could be a disproportionate amount of selling that'll break it essentially.
Yeah.
Okay.
And especially if it keeps grinding lower like it has, like this is a very, very slow kind of move down. And these kind of slow moves down get people complacent, right? They're like, oh, I bought because of good news. I'm a little bit underwater, but it's okay. And then it slowly goes lower and lower and lower. And then at some point they're like, oh, I should have sold yesterday, but given I didn't sell yesterday, now prices are
Up
lower.
0.8%, so I'm okay.
Yes. And then it goes up a little bit, they get excited, and then like if you have a steep drop, right? People are just like, fuck it, I was wrong, I'm gonna get out.
Yes.
But if you have these kind of slow moving like moves down, people are more likely to just stick with bad positions and then get in more and more danger basically as price goes lower. And this is kind of doing a little bit of that. And
Yes.
the cool thing is, if it actually does reverse, if it does go back above 30K, I think it will basically do the opposite. So then the script is flipped, and I would be willing to kind of take a trade, especially if you look at the daily time frame. Starts looking quite good above 30K, right? You basically reclaim that range that we've had, and then you have a bunch of people trapped that's sold down here, and you still have the ETF news kind of catalyst, right? People are still be able to say like, hey, we're gonna get an ETF, and that's gonna make people FOMO if price goes up. So we're kind of in this weird situation where if we go up, we're probably gonna go up significantly, and if you go down, we go down significantly. And for me, the market has chosen its path like a couple of days ago when it broke the range low. I suspected it would. And if it does reclaim that, I'm just going to assume that this was the false breakdown, and I'm going to be more than happy to take positions again. But I think it's a fool's game to kind of buy range breakdowns, especially if they're as insignificant as this one, right? You're not getting a large discount. Whether you buy 29K or 30K, like there's no discount there. Like why would I be buying a confirmed range breakdown for 1.5% cheaper? Might have as well bought 30K and just held. Like that isn't a big difference. So for me, those 1.5% are completely useless. It's much better to buy higher.
Yeah, that difference isn't massive. Neither. The thing is, it's not massive from a price point of view, but from a technical point of view, it just makes your life a lot easier if you wait.
Yeah.
You mentioned the word complacency. I've been thinking about that a little bit because Bitcoin volatility has just been drifting lower. So one of the conversations I've had with myself, which are most of my conversations in my day-to-day life, but nonetheless, I was kind of going back and forth on this, thinking, okay, so we have a range breakdown at a key level after 4 weeks of being stuck there, and vols keep drifting lower. So either the market is super fucking complacent about the breakdown and is going to get caught with its pants down once it follows through and reaches the scary 20s prices, or the market doesn't care and is apathetic because the odds are it's sort of betting on a fake/failed breakdown. I don't know. My inclination is complacency at the moment, at least until the technicals look better. But I think it's a useful point of context that the options market, or just the volatility in general, doesn't seem to be reflecting the TA magnitude of breaking the range. Right? So there's a divergence between what the technicals are saying and what the market seems to think that the implications are for volatility. So either the technicals are wrong, in which case you long the long the reclaim, and happy days, or the volatility is essentially being mispriced, in which case look out below, because those people are going to be rushing for the exit if/when the market picks up and they realize that, hey, I bought 30K, I haven't really been checking the price because vol's been low, and now it's at 26. What happened? And that won't be particularly good. So that's an interesting back and forth and dynamic worth watching. I think that particular divergence. As far as 30K goes, you mentioned that as a reclaim level on several occasions. I've got the daily time frame up, and I've just boxed out the last Sunday fake pump we had before the range broke down. Do you think that's the most valid / helpful reclaim structure? Is there another one? Is there another time frame, or is that daily kind of where you're putting a lot of weight on the invalidation more broadly?
No, I think that's the best level we have. It's reasonably close to price, but it also marks a significant kind of shift in thinking. Basically, like anyone that looks at this chart and sees that we come back above that is gonna kind of be more bullish, and maybe that will bring the kind of positive sentiment back, the kind of FOMO buying that we need. So I like that level the best. I don't really think there's much better ones. Before we had the breakdown, I was like, I was making the same argument just with 30.7K, right?
Yeah.
I was like, we had false breakouts to the upside. It's never good if they don't lead to anything. But I think the third time that we would go back above 30.7 would actually be the time where it's more likely than not to go further up. And it's quite nice to be able to shift that level lower, right? So basically, the for me to switch bullish has gotten cheaper now.
Yeah.
Because if I'm able to buy 30, 31, 32K instead of 37, and 37 might have slipped me to 39, or maybe even 31K, then yeah, it's considerably cheaper and it's an easier entry point. So I like that level. I think that's kind of the line in the sand for the earliest bulls, right? And this is the thing, like, I think this is not necessary. Like, if we go back above 30K, a massive bull move is not guaranteed. I think this is just the only bullish argument that you would have at this point, right? Like, if you want at least one bullish argument on your side, that would be one.
Yeah, I was actually going to ask that question, right? I'm sure you're getting there, but like my inclination was, if we reclaim 30.7, how strong a signal is that? Because of course you mentioned the script flips, you might get FOMO buying, etc. But the natural counter argument is, hey, we're still stuck in a range, right?
Yeah.
So 30.7 breakouts didn't lead anywhere. 30K breakdown maybe doesn't lead anywhere. So I guess what's the impact of the 30K reclaim? Is it high conviction bullishness, or can you take a more tempered view and say, well, at the very least, we're back inside the range? Are you kind of moderate on that? How, what's the conviction on that technical signal?
I think I would just, if we do that, right, if we reclaim now 30K, right?
Yeah.
If we reclaim 30K, I would aim for 32, 33. Okay. I think that would make sense. And then I would reevaluate again and see maybe we just start struggling in the same area again. And I take my profits. At that point, that's 10%-ish. That's good enough. And then go from there. But maybe, like, depending on the strength, of course, right? Like, we reclaimed 30K. The next day we're at 31. The day afterwards we're at 33. I would probably not sell,
Yes.
right? Because those kind of moves, they tend to accelerate, right? Like, if you see like a 1K daily candle, the next day you see a 2K daily candle. The day afterwards is more likely than not going to be a 4 or 5K daily candle. And that's something that I would not want to sell into. But if we kind of like reclaim 30K and then go to 30.5 and then kind of struggle for a while, and then like, that's a different ball game, right?
Yeah.
And I think in general we're in an area where you would expect this market to kind of be shit. And this is why I've been telling people, like, you should really not be trading right now, because even if this reclaims, there's a good chance that we're just going to still go sideways for 3 months. It just seems like the market wants to consolidate, wants to chop, wants to do nothing. And it makes sense too if you just look at the weekly time frame and how it's set up, right? We had a top range that broke to the downside. Now we had a bottoming range that broke to the upside, and we're exactly in between those two. And that is just basically where the bulls and the bears battle it out, and where, like, most traders just lose all their money, right? And then if you get back into the bull market range, like, I've denominated them with bull market range, bear market range, basically.
Yeah.
And the bull market range would be above 33K ish, and the bear market range would be below 30K, and everything in between, like those 3K, those are where the market needs to make up its mind. And I think that's where you should expect the most chop, and you will get the most chop. And this could also be where we just have a bearish retest, right? So
That's the DonAlt tweets about Rollbit everyday range. You should rename it to that. I think it'd be far,
Yes.
far more accurate and appropriate. No, I think all of that makes sense. Yeah, 30k is a decent line in the sand. I do want to bring attention to one thing though. When it comes to levels, most of the counterfactual discussion only happens one way. So you never see in an uptrend people argue, but if it falls back below the breakout level, it's really bearish, and then it goes up. But if it falls back below the breakout level, it's really bearish. It doesn't really happen, right? It's not a feature of a market that goes up. But when the market goes down, like the sort of discourse is very heavily dominated by counterfactual propositions. Like support breaks, but if it's not really broken, it'll go up. And then like support breaks, and you keep going. But it seems like that luxury of hypotheticals is only afforded to support breaking and not to resistance breaking, which is an interesting psychological bias to be aware of if you think about the market in those terms. Cool. I think that's pretty much BTC done. Below 30k, devs are scamming. Above 30k, ETF approved. We're going to a trillion. Rather straightforward dichotomy there. ETH, is it even worth doing this? I mean, this is just one of the worst charts ever. I really think daily ETH USD is like satanic. It's just not a good chart. And I don't care what fancy TA system you use, it's going to give you every single wick and level. This is just not a good chart. The weekly, I don't know if you've heard of this level, Don. There's a nice weekly high we made at 1935. But look, nothing's changed since last week. It's still as frustrating because resistance is resisting, but not enough to print if you were selling even kind of above the level particularly well, right? It's sort of still stuck. Hasn't even made a lower low on the weekly. If you take the sort of the lowest close within the last 3-4 weeks, that comes out at 1862. You know, that big red rejection candle. We haven't even closed below that. That's kind of where we've wicked. And so as a result, between, if you measure from 1862 to 1935, that's like a 4% range we've been in for like 4 weeks, which is insane. And should also let you know that if you're following people who are spamming really strong opinions over the past month, back and forth, tell them as in the most polite terms possible to like zoom out or something, or I don't know, recalibrate in some way. Because if you're forming really strong views back and forth based on a 4% range in a whole month, then I don't know what leverage you're trading on, because the market really hasn't done anything. Hasn't broken above resistance, but resistance can't even force a local lower low. So that's like about as nothing burger gets. I don't really know if you have any other color to add on the USD side. I know you're not a fan of any other sort of support levels below because the weekly chart hasn't been charitable in general. It's just not a particularly great, the offering at the mid thousands isn't super clear. I think you like 1400, right? The prior all-time high, just as a decent pivot, but everything else seems a bit mushy. If readers or listeners in this case want our view on ETH, we actually wrote it up fairly comprehensively in Technical Roundup, which I tweeted recently. So you can go to that account and check it out. The basic argument was because the ETH chart sucks and because ETH BTC is weak, if you want to be bullish ETH, at the very least, you either want the 1900 breakout, in which case the 2500 resistance becomes likely. So that's cool. Otherwise, you should really look towards Bitcoin levels of support because they are clearer. And while doing that, ideally, you want to see some ETH BTC strength as well, because it would suck to end up in a position where you've bought the low on ETH, but you underperform because you didn't look at ETH BTC or just because BTC sucks up all the liquidity and preferential bidding. So that's kind of what we lean towards the newsletter. I mean, my personal views don't diverge from that either. I just refuse to get excited about a 4% range at resistance for the time being. It looks weaker than it looks strong, I mean, obviously. But generally speaking, there's nothing to write home about. Yeah, certainly with ETH BTC being unhelpful as far as matters go. So.
Yeah, I find like, I generally think that ETH is just the worst trade than Bitcoin. Because it's basically it's trading like Bitcoin, just with like a little bit of like muddy waters to go along with it, if you know what I mean. Like it's not as clear just because ETH BTC is not as like ETH BTC is basically kind of intercepting the Bitcoin trade, and it's not really doing significant things, right? So you basically have an ETH BTC range. And that's giving you like 1 or 2% moves every now and then on ETH USD, but in total, you're basically trading Bitcoin, just with like a little bit more weakness, a little bit more strength,
and worse levels.
And worse levels, yeah. So it's kind of like you're trading a choppier Bitcoin, and I think that's not what you should be trading. You want to be waiting until it's clearer than Bitcoin or offers more upside. And right now, ETH BTC is in a downtrend, and yeah, that's just it basically. So you're buying a weaker Bitcoin, not significantly weaker, because this thing just moves like 0.1% of a difference a day in Bitcoin terms, it feels like, but it's still weaker, right? It's been trending down since September 22 against Bitcoin, and until that stops, I don't really see a point. Like if you want to capture that like 1% outperformance in a week, or 2% outperformance in a week that it does sometimes when it mean reverts after dumping a bunch, cool. But that's not for me. I don't think there's a clear trade there.
Yeah, that's a good way to describe it. Kind of like a choppier Bitcoin without the benefits of outperformance. That's not a great deal. Even locally, it's been in a range for a month, ETH BTC.
Yeah.
So yeah, that's not super attractive for a high time frame show. Speaking of not super attractive for a high time frame show, have you been following altcoins? So most of the interesting altcoin stuff is simply going on chain at the moment, and
Yes.
the liquidity there from I saw something recent where for like I think it was the top 100 of I don't know exactly how it was measured, but it was something like 2% market impact from an order of 100K for like a large amount of the top X caps on chain. Again, I don't have the exact figures or the methodology at hand, but as you'd expect, it's much more illiquid. And it just seems like, I mean, look, there's opportunities there. I think it's really important to know the weaknesses or drawbacks of any crypto content you consume. If you're someone like grinding, especially like a smaller account balance and looking for on-chain gems and rotations and trades, this might be the worst channel on the internet for you, quite simply. Because we didn't do any of that, no interest in that, don't cover it at all. Sometimes to our own peril, often not. I'm sure you can make arguments both ways. But it seems like if you're an altcoin punter, if you're looking at like high caps on centralized exchanges as opposed to lower to mid caps on chain, then you're wasting your time in comparison. Because the high cap centralized exchange stuff has been really uninteresting for a while now. And again, I understand there are 2, 5, 10% rotations going on. You've got outliers like Tomo today, I think, is up a shit ton. Some weird open interest outliers as well. You can see via very simple dashboards. There are opportunities and kind of, I don't know, trades sticking their head out among a sea of flatness. But in general, especially for our purposes, there really hasn't been a lot going on in the altcoin space. I mean, Dogecoin tried to break out on the, what was it? Did we have a weekly trend line or a daily trend line on that thing on Doge USD?
We had a weekly.
Weekly, yeah. I don't think that went anywhere quite yet.
No,
and even
it's actually still struggling. Yeah,
Right.
It's rejecting right now.
Yeah, and even the Doge trade, like if you want to get a sense of how flaky and shaky the narratives are at the moment, there's actually no Doge news at all for the time being. There was some tentative, not so, exaggerated to be polite, sort of Elon rebrand X Doge point payment mechanism usual nonsense, but that really wasn't anything. And so the Doge trade, however you want to describe it, seems to be like speculation on speculation, right? So maybe Elon, when in this whole rebrand thing, does something Doge payment processing and so on. So the market's dead, so I'm going to buy the Elon coin because Elon is in the headlines, and that's tentative to be charitable. Solana as well. After we discussed I was about to say after as if we had some sort of causal effect there, which we obviously didn't. But we talked about the $30 retest as being the most obvious resistance and retesting the point of breakdown, and the market's sort of underperformed since then and really has just drifted essentially from that point onwards. If you want to get slightly more granular with it, you could also argue that the daily range high around, 26, right? If you want to round up or round down, depending on where you draw the level, it fell back within there as well. So it hit weekly resistance and then fell back within the daily range as well. So that's not a fantastic look. That just, look, it was an amazing move. It more than doubled. but it hit big resistance, and since then has been weaker than a lot of other stuff. And those are the two big ones, at least from the high caps. Is there anything else that you're aware of? I'm not going to do the Litecoin halving thing because lol.
Yeah, I mean, we talked about this. I still see a bunch of people shilling it, and I'm so confused. Like, I don't get it.
Yeah,
But fair enough.
fair enough. Yeah, I haven't been following any other alts really.
No, I mean, XRP has been interesting, but that's also been kind of like doing nothing. And that's, I think, one of the best signs for the market, right? XRP won a huge case. I mean, it did basically exactly what we wanted it to, right? We talked about it on Technical Roundup, the newsletter, that we wanted it to double basically on the news, and it did exactly that. But you would expect it to, like, the way it won, right? Because I was expecting them to win, but not the way they did.
Yes.
Basically, very, very convincingly. You would expect the market to do more. But given it's not, and given it's been basically going sideways / actually been bleeding for the last 2 weeks, that tells you everything you need to know about the altcoin market. Which is basically just very, very dead. There's very little volume, there's very little interest, and you have to force people to take trades with narratives like this, right? The Litecoin halving narrative didn't really pick up. Like, there was a bunch of people that were trading it, including me. It went from 60 to 100, 110, and that was that.
Yeah, well, the trade worked. That's the funny part. It's just
Yes.
people have a really weird expectations for what the halving trade working looks like. Because intuitively, you
They're
might
like
think
10x. Now 10x.
well, the targets always get outrageous, but even in terms of structuring the trade, you might think intuitively, if you're sort of the newer school of catalyst trading, that Litecoin halving, positive news event, and if you long positive news events quickly enough on alts, number go up. But it's slightly different if it's something that essentially gets baked in weeks and months in advance, if it's something programmatic versus some sudden news that drops. So the Litecoin halving trade worked if you had reasonable parameters for it, that I'm going to buy before the halving and sell into the halving. Because I think I'm going to buy the halving itself is a different trade and not as good as the first one. So that kind of did its job, right? XRP also did its job, but it's always telling what the market does after it's done its, performed the bare minimum. And in this case, it's just been drift and bleed, which, I mean, maybe consolidation, but drift and bleed primarily. BCH as well I've brought up, right?
Oh, yeah.
Yeah, that's another one. It had this was like the mega outlier pumper, and since then, just daily time frame drift, and that's really the state of the altcoin market. Sorry, I cut you off. What were you gonna say?
No, it's just basically boring.
Yeah, it's boring, man.
And I think this is gonna continue. Like, you're gonna see some outsized pumps, and then you're gonna see on Twitter like, haha, look at these idiots that said altcoins are not doing anything. Like, this is always the case, right? It's very, very funny. And then it full retraces, and essentially, like, a bunch of people made money by spotting it early enough, and the other side of the trade, basically, it gets completely rinsed, and then you pick a different coin the next week, and the same thing happens, and it just keeps going like that. And it basically doesn't go anywhere, right? Because yes, there are trades there in general in the market, but you're not really, like, you're not getting sponsored by anyone, right? Like, you're not buying into a market that generally drifts up. You're buying into a market that has essentially a bunch of pump and dumps that you might take advantage of and you might not. So you have to be quite good at what you do to make money. Whereas if the market in general goes up, if you just buy something, there's a good chance that even if you pick wrong, that you're going to make a few percent, and if you pick right, you're going to make a bunch of money. Mm-hmm. So that's much, much more interesting, right? Like, you generally want to avoid trading markets where money flows out of them, and this is actually something that you see in the stable coins right now, right? I think that's the best explanation of what's going on in this market, because basically, if you compare the amount of stable coins we have in the market to just a year ago, it's basically been a downtrend, right? Like, money's been leaving the crypto market for quite a while and chasing yields elsewhere, just in general, just de-risking, all that kind of stuff. And until that stops, you're basically fighting an uphill battle, because stuff like, there's liquidity flowing out of the market, and you're trying to find the ones that pump a little bit. But more likely, like, if the entire market is kind of like drifting lower, if you're trying to buy stuff, there's a good chance that you're just gonna fall on your nose, right? Like if you don't pick right. And I like to tell people that they should be focusing on trading when the tide comes in, right? Like when the collective money pool kind of grows, because then you're buying early essentially. And what you're doing right now is you're buying into something that is losing value by the day, which is fair enough, right? Like if you think this is it's gonna be the turning point, whatever. But what you need to realize is that, and this is something that we've seen cycle after cycle, that once Bitcoin actually turns fully bullish, right? So let's say I'm the idiot because I'm not buying here, and Bitcoin just puts in a daily candle that goes from 30K. In that same day where it reclaims 30K, it goes immediately to 40K, right? And I'm an idiot because I don't have any position, because I've been bear tarting 31K. But the thing is, like, I'm just gonna have to open up the altcoin lists, see what's performing relatively well, put a bunch of money in that coin, right? Because if you get a candle like that, there's gonna be heightened interest in crypto again, and people are gonna try to opt from Bitcoin, and I'm gonna just have to not even leverage and put my money into a coin that is fundamentally somewhat sound, and more importantly, is outperforming relatively to the rest of the market.
And where you have a pre-sale allocation, of course.
Yeah, of course. No, we never. We never.
God.
I've nuked all the chances of pre-sale allocations over the years, and I've done so with great joy.
Yeah,
And then
and I'm the Yemeni wedding in this analogy, just the collateral damage to your moral crusade. But yes, please continue.
Yeah, and then you just push your money in that, and that coin is gonna be up 50% the next day or the day after, and you've basically made up for kind of missing out. And the idiot from next door that didn't really give a shit about crypto because it's been kind of shit for the last 3 years, right? He's gonna outperform you in 1 or 2 single days, just buying some garbage coin you've never heard of, and he's gonna not have spent the entire mind share that you have sitting in a market that is completely performing like shit, basically costing you years of your life just watching the chop go by. And I mean, that's just a shit situation to be in, right? So I think, like, in general, like, if you're losing all your money during chop, it's just not doing you any favors. And even if you miss the obvious bull, like the obvious, but even if you miss the first bull move, you're gonna be able to take advantage in other areas in crypto, and you're gonna make more in those than you would have in that first move anyway. So I think it's a little bit meaningless to be like, oh, I need to catch every single move while the market is just chopping / money is flowing out, because the moment money flows back in, you're going to have crazy days where you're going to outperform 3 years that you would have had otherwise trading in just one day. So that's my opinion.
And
I
that
think
same
it's,
dumb neighbor has no PTSD either. So he's
yeah,
unlike you, who's been correctly, given those conditions, trained to close trades at like 2% higher, 3% higher, 5% higher. He'll see that he's 10% up, and instead of worrying about, oh my god, it's overbought, I have to close, he'll just be like, oh, nice, I'll check it tomorrow, I guess, to see how much more money
yeah,
I
or
made.
he's going to buy more. He's going to be like, whoa, crypto's back. I'm going to buy
Yeah.
more. And he's probably going to be right. And
Then he'll lose all his money round tripping. But
at the end of the day, the
yeah.
result is he's going, and that's the advantage that you have, right?
Yes.
Like, as someone that has been in the market, not like the neighbor that hasn't, you know what's going on, right? You know that bear markets are gonna kind of come back and take all your money if you're not careful. So basically, you might have PTSD and you might sell too early, but next cycle around, there's a good chance that you're just going to be able to hold on to like a significant part of the winnings that you made during the bull portion of it, even if that like bull portion of it is lower, because that's something that I've noticed for myself too, right? Like, if I compare myself to some of the like lower IQ people that I see on the timeline,
Oh,
like, I
geez,
think,
Don.
and I mean, it's just true. Like, they
Pew pew.
outperform, they just outperform me during the bull market, right? Like, percentage wise, they basically go from nothing to millions, and I'm like, what the fuck? Like, they have like a 1000x multiplier left, right, and center, and then they just give it back, and then they do it again. And I'm like, I could
Yeah.
not live like that, right? Like with those kind of swings, like I lose my mind, but for some reason they don't mind, and that's okay.
I'm sure they mind once they round trip the whole thing, but
Oh
yeah.
yes, but like the cool thing is, like if you do it right, like you're gonna see cycle after cycle that you have more capital to allocate, and it gets more and more chill, even if you get outperformed by other people.
Yeah.
And I like to minimize as much stress as I can. Like if you're in the deep end of the bear market and you're like super stressed, that's not what I want to have, right? Like you have to optimize during the bull markets and in general, for the times where it gets rough, even if that's going to cost you like a 10x, 100x, whatever. I think that's worth it in the long run, especially if you want to stick with it. If you just want to hit one lottery ticket, I mean, by all means, just stick with that one coin that went up 100x and hope for the 10,000x. Be my guest. Maybe it works, maybe it doesn't. But if you want to make this into something serious, I think the best way to do it is just kind of like taking it cycle by cycle and making sure that there's no way that you get kind of wiped out. And one part of that is just not over trading when it's very boring and when the water is flowing out of the market, and the water is stable coins in this analogy.
Yeah, it's a decent measure, I think. Just in general, I think as a relevant point of information, newer viewers might have the perception, which isn't entirely wrong, certainly at this point. They're like, oh, look at these two boomers, right? Complacent boomers. Don is even worse than Cred. Well, actually, I'm terrible because I've taken 0 trades in 7 years. You're terrible because you like hate crypto ideologically, every facet of it, and you're all in TradFi. But I seem to remember, and it's worth the audience knowing, 2017 to 2018, you were probably the biggest degen that I knew in terms of all facets of crypto. You would sleep like 3 hours per night for months. And you'd set like alarms for everything and wake up even during those 3 hours, and then weird power naps, trading shit coins on the 5 minute, like absolute type of degenerate behavior. So this isn't just conjecture in terms of, oh, so you can do this or you can do that. This is, coming from a place of experience, having tried both.
Like it's basically, and I think this is kind of how you have to think about it. If you're sleep deprived coming into a bull market, right? Like you're just not going to have a good time, because then you're not going to be in the state of mind that you need to be in. What you have to do instead is, like, the bull market comes around and you're well rested and you can completely fuck up your body and your mind and everything else. Like if you actually want to like take advantage of it, right? Like if you're just like, okay, I just want to make some money, and I'm more in that camp now. Like I'm never gonna fuck myself over as I did in 2017, 18. Like that took me like 2 or 3 years to recover from.
Yeah.
But it was worth it, right? Like that was basically, I was like, I'm trading like a couple of years of my life because it was more than stressful, and like lack of sleep is just not good for you. For like making it in quotes, right? But at least putting myself in like a position where I can be like financially stable and secure for the rest of my life at least. And then I was like, fuck it, I'm just gonna push it. But if you go into that, like if you already do that now where the market is shit, you're not gonna have the energy to do this for like the 3, 4, 5, 6 months that it might take. And then you're gonna burn out and you're gonna do dumb shit, and you're not gonna be able to take advantage of like the absolute degeneracy that is about to commence.
You can make more in a week than in 6 months, depending on the market. It's not even in a day sometimes.
I think you can make more in a day than you would make in 4 years in between cycles. It's just how crazy the market.
Yeah, certainly towards the end, right? When it gets really blow off toppy, things get insane. I think a good way to think about it mental model wise is you're buying yourself runway in the bear market for the bull market. So it's like, do you want to really burn through your runway when the opportunities in the market are lower? Or do you want to build it so that when it's time, you can just, utilize your reserves, so to speak, health, attention span, relationships, whatever it takes to really commit to those 4, 6, 8, 12 months. And then that should pay off disproportionately well if you're well set up for it. So who knows, Don? Maybe that'll be next week. But 30K reclaim. Yeah.
And the cool thing is, like, there are still opportunities in the market, right? It's not like the market didn't do anything. Like the market doubled, like Bitcoin doubled from 16 to 32K basically.
Yeah, all the Pepe and on-chain stuff. Yeah, it's been Solana
But
doubled as well.
for all of what happened, basically, there was no need to kind of stretch yourself thin, right? Bitcoin was like a pretty slow move, all things considered. It didn't go from 16 to 32K in a week's time, which it used to do during the bull markets, where you're like, fuck, if I missed that, it sucks. It gave you all the time in the world, right? Even if you didn't buy 16K, if you bought the reclaim of 20K, you still got a 50% move towards 30K, right? So it's not like there's no opportunity there. But it's just a slower kind of opportunity. And I don't want to discourage people from doing anything at all when the market is not as explosive, because like a 2x at this, like before a bull market starts, can have quite a bit of significance
In a high
in the
cap,
end
no less,
result.
unleveraged, which is crazy, actually.
Yes.
Yeah.
But I just want to make sure like that people know, like if you overtrade and just kind of lose your entire bankroll during times like this, you're gonna regret it even more during the bull market. So there has to be a balance, and I think the best balance when the market is slowest, like this, is just zooming out. That's why I always have these like targets, like 30K, 30.7, where I'm like, okay, maybe at that point it accelerates again. Like you just kind of wait for the moment where it will accelerate again. You take brief advantage, right? In this market, if you look through the last, like when it's done well, it's always been just like 1, 2, or 3 days. Like it's gone sideways for a month, then it's 3 good days or 4 good days. Like if you look at the 11th of January, or like in general the start of January, where it starts accelerating, that's 4 days basically, from like 17.4 all the way to 21K, and then it went sideways from that point onwards to technically March, right? So 2 months. And then you had again like a massive candle to the upside. If you bought into that one, you had 1, 2, 3, 4, 5 days until the next kind of range began. And then went sideways again for 2 months, and bled out a little bit, or 3 months even. And then you had another 3 days where it went from 26K to 30K. So like it was just a couple of days, and this is generally how markets behave when they're not completely crazy. So oftentimes, if you have the right triggers, you can just be away. You get like your signal. For me, this would technically be like 30.7K close, and then we're gonna probably get another 2 or 3K in another 2 or 3 or 4 days, and that's what I want to take advantage of if we do get that. And then maybe I'll just chill again, and then it's gonna be sideways for another 3 or 4 months, and there's not that much that you need to do in between. Like there's nothing really interesting happening during those choppy 2 or 3 months where it goes sideways, I think.
Yeah, I think that's fair. And also in general, speaking from 2017 experience, when I was in university and just started getting interested in the first/second quarter of the year, there is no worse feeling than being well there is, I'm sure, but just for idiomatic purposes, there is no worse feeling than being undercapitalized in a bull market. It's just awful. I can't even begin to describe it when you're just putting on a position and you just know that you should be able to add a 0 to that position size if you could reflect your level of conviction, but you can't because you don't have the capital for it. And if one of the reasons of not having the capital for it is because you burnt it away in chop or in less favorable conditions, that just feels extra bad. So avoid that if you can. And to round off the altcoin point, in general, it feels like most of the alpha/edge at the moment for alts is either on-chain or via low time frame, just like sloppy execution on behalf of other participants if you're on centralized exchanges. Everything else, regime, trend, sector-wise, to me seems virtually non-existent, unfortunately. So
yeah,
that's that. That's that. Should we do some news?
Yes.
Cool. Let's run it. Leave a like on this video if you learned anything, or if it's just nice to listen to, or any reason whatsoever. So let's talk. Grayscale. Talk about sabotage, Don. Grayscale pours cold water on wave of new spot Bitcoin ETF applications. So they used the Thursday letter to the SEC to pour cold water on excitement that has been mounting for the Bitcoin ETF. As we know, the SEC is currently reviewing applications and then writing to the SEC. Grayscale is kind of snitching on crypto, essentially, and we'll talk about why in a moment, saying The possibility of a surveillance sharing agreement between a listing exchange and a spot Bitcoin trading venue is not a new idea. Pointing out that Coinbase is not, thank you Frank Shaparo for the wonderful advert, Coinbase is not registered with markets regulators as either a national securities exchange, broker-dealer, or futures exchange. So essentially the argument we're making on Casual Friday, either again 1 or 2 weeks ago, I've got concerns about that whole surveillance sharing agreement portion and Coinbase being named, given they're in litigation with the SEC, and the SEC doesn't seem to think that they're up to par. I think Gensler also had some recent comments, which we're going to get to.
Yeah.
But now Grayscale is making this argument. Now you might think, well, why would they? Essentially, don't they have an interest in this? And the problem is, if something like a BlackRock ETF gets approved, then Grayscale, stands to lose a lot of certainly future AUM, right? Like if you're looking for a ETF type exposure to Bitcoin and you've been stuck in Grayscale, mega underperforming and discounted and illiquid in relative terms all this time with an objectively inferior product, you can kind of understand why they've got some reluctance for the specific applications that are being considered at the moment. And Hall added that any approval, if one comes, should include all previous ones that have been disapproved. And he said that the company supports a regulatory approval that would facilitate the approval of all spot Bitcoin ETF proposals. So now you can see what the game is, right? Because for them, they sort of... But listen, this is the part that gets tricky. If you take their words at face value, they want the Grayscale Bitcoin Trust to be converted into an ETF. I don't really believe that, personally, as my honestly held opinion. Because the Grayscale product as is, if it gets converted to a proper ETF and there's actually a redemption mechanism and that discount can be closed, who the fuck would stay in GBTC if a BlackRock one gets approved, right? It seems like, with all their legal troubles and historically how the product has performed, if there's a way out, I think a lot of the participants in that trade who own GBTC are going to take it, and then if they still want ETF-like exposure, they'll just go via one of the more approved and established ones like BlackRock if it gets to that point. So I think that's a tricky tension. But yeah, you can kind of see a weird sort of conflict of interest, among other things, when it comes to Grayscale and the current ETFs under consideration, kind of talking out of both sides of their mouth. But look, overall, unfortunately, with that in mind, the argument is not one that I disagree with completely. I think there are really good reasons, as we'll discuss again momentarily, to be skeptical about ETF approval, specifically with the Coinbase surveillance sharing angle. But what do you think about all this?
Yeah, I mean, I agree with you. In general, like the whole Grayscale thing, it's kind of funny because I remember during the entire run-up, people were applauding him as heroes, right? And now it's a major drag on the market. So basically, we had a nice bull run fueled by them, and now we're having a nice bear market fueled by them as well.
Yes.
Not really like the thing that people would have liked to see, right? Like it's this typical short-sightedness that we have in this market where bad actors and like bad products are praised just because they slap crypto on, or like just because they're making price go up in the short term, and then we get the bill later.
Yes.
And it happens over and over and over again, and those people are always celebrated. Just think about Do Kwon, right? When he was buying Bitcoin to kind of insure his whole Terra Ponzi.
Yeah.
And I remember us too being like some of the few people that were like, this is just bad. Like this is, even if price goes up, this is just bad. And it led to like some of the worst blowout that we've seen in crypto in years, right?
Yes.
And this is going to happen over and over and over again. For some reason, Bitcoiners just like, as long as someone says Bitcoin good or Bitcoin or makes Bitcoin price go up, they will be like, this is the greatest person on the planet. And they don't really give a shit. And that's kind of like, that's what I have every time I think about the whole Grayscale situation. It just comes to my mind. So I thought I'd say it.
Yeah, no, that literally went from Kingmaker arb trade to Widowmaker garbage collateral trade.
Yes, and it took out some of the biggest players in
Unbelievable,
the space.
really unbelievable. So yeah, we'll see. I can understand the arguments they're making, but obviously they stand to lose a lot, and I can understand the interest that they're trying to defend. But Yeah, not so great. But on
Not so
the
great.
ETF front, Gensler raises concerns about fraud and manipulation when asked about Bitcoin ETFs. Obviously, he can't comment explicitly given it's a commission-wide consideration. But Gensler raised concerns about the general fraud and manipulation in the crypto industry when asked for his thoughts about the ETF applications. And the quote portion is, "There's a lot of non-compliance in this field," Gensler said, remarking on the combinations of different market functions that can occur on crypto trading platforms that are prohibited in traditional financial exchanges for conflict of interest and investor protection reasons. The platforms themselves, where trading is occurring of various crypto tokens, though some of it comes under the securities laws, currently they're not necessarily compliant with those time-tested protections against fraud and manipulation. So it really just feels like he's pouring more water on this thing as far as the ETF goes. Look, the more I think about Coinbase as the surveillance sharing partner and great sort of Gensler's and the SEC's position on Coinbase, I have to just keep mentally revising down my odds for ETF approval. I'm not sure if I'm quite yet in the camp of denial being more likely than approval, but I'm getting there in terms of my own personal thinking. I think a delay is very likely at this point. At least in my mind, that seems really likely. And honestly, from a trading price action point of view, delay might as well be rejection, because that would be pretty ugly, I think, chart-wise. And that whole scenario you mentioned contextually of ETF candle buyer traders getting spooked if price trades near their entry, that is easily fulfilled by delay, without even getting to rejection. So this is like a moving target, obviously, but I just don't like the way it's shaping up, if that makes sense.
No, I actually for me, I was pretty certain at the start that it was going to be approved, just given BlackRock's kind of track record. But given these kind of recent comments that Gensler made, right, where he's still very negative, my base case was basically like they were in talks with the SEC, right? And if Gensler doesn't know about it, or is just kind of like, this is still shit, then that argument just kind of falls flat a little bit. So, I've revised my chances down quite significantly too.
Well, look, if you want to talk about track record, the SEC has denied all of them so far. So it's an unstoppable force meeting an immovable object. It seems, full BlackRock's track record on the approval and the SEC track record on denial. So that's always fun.
I think a denial would shock me if it came straight off the bat. I don't think that's going to happen. But I do agree with you that it's very likely to be delayed, and I think that would shock crypto participants. And I would nuke the market. I think we had a massive candle to the upside based on the whole possibility of it. The market's been weak ever since. If we now get a delay, I think a bunch of people will jump ship, and that could lead to quite a nice washout. I could see myself buy that, right? Like if you get a news event like that, that washes out the market, I'd be down.
And then it gets approved. Can you imagine? That'd be so
quite funny. Yeah.
Yeah. So more Gensler stuff. We'll keep an eye on this, but it looks like we're both perma-bearing slowly, week by week, on the approval chances. Maybe we're completely wrong, but at least it's worth sharing the mental process. And over the last 3-4 weeks, my odds have been revised lower.
The cool thing is, right?
Yes.
Like when these things happen, right? Like I tend to be, or like in general, like I think both of us, we tend to jump on it early, right? And then as more and more info comes out, we're willing to abandon positions as needed, if needed. So in this case, for example, like it was a pretty good position. Like if you heard about the application, right? You had a couple of days to make money. If you were early enough to kind of just be like, oh, this is significant. And now you've had a couple of weeks to kind of be like, oh, maybe we need to chill out a little bit. And for some reason, people tend to only listen to these kind of events after price has gone significantly up or significantly down, right? So us just kind of being a little bit early to this, even if wrong, because I would say like if this gets delayed, a delay was not necessarily out of the cards for me, but I could see this just go through straight up. So I would say I was wrong, but I still made money on it just by being early enough, and then being early enough by jumping that chip as well. So yeah, we'll see. We'll see how it turns out. Maybe we'll just get a flat approval and market just giga rallies. But like I said, there's going to be other opportunities then, even if the Bitcoin trade is missed.
You know, the Bloomberg guys have a base case of delay, which I found really interesting. Yeah, there's Eric Balkunas and another gentleman, James Seifert. I probably butchered both of their surnames, apologies. But the sort of Bloomberg in-house ETF experts, they have a base case of delay for the BlackRock ETF. And that seems not priced in, if they are correct.
Yes.
So we'll see there. That's something to keep an eye on.
I think that's what the market, like, that could also be like, because I've been saying like, oh, bad news, like it feels like bad news are gonna come out just based on the relative underperformance of crypto / Bitcoin. Maybe that's just what the market is trying to price in a little bit, right? Like smart people are just like, maybe the odds are actually not that high and it's gonna be a shock to the system, so taking profit. Maybe that's just it. Who knows?
Who knows?
We'll see.
Yeah, we'll see, I guess. We'll get answers to all these questions sooner rather than later. Sequoia cuts back size of crypto fund, Wall Street Journal says. So they're quite a high-profile VC fund, and they cut down from 585 million to 200 million. That's more than a haircut. That's when you go in to get a trim and you come out with a buzz cut type of thing, which has happened to me more times than I'd like to admit. The most painful one being when I'd grown my beard for like 3 months. And
I remember that one.
Yeah, I went in there for a trim, and I was like, oh yeah, just beard, I want to keep it long, just clean up a little bit. And the guy thought I said clean shave, and just did that one swipe with the machine, and I just saw half my face fall off. Yeah, that wasn't particularly fun, but here we go. Yep. More downsizing. So this isn't the first high-profile fund that either sort of steps away from crypto or pivots slightly or reduces the size of the fund itself. There was a lot of, you'll recall we covered the Paradigm taking crypto off their website before briefly putting it back on. I saw in general, like the amount raised by crypto VCs this year compared to every other year, it's been completely miserable for 2023, as you'd expect, given how 2022 went. But I think it all just goes on to support the argument for an outflow PvP type of market for the time being, as opposed to the alternative. So.
Yeah, I mean, where would they put the money in? Like, I don't think there is anything.
Room temperature superconductors, Don. You got to pivot from crypto to AI to room temperature superconductors. Are you not keeping up?
Yeah, I mean, if that's true, that's the way to actually pivot. I'm not even kidding.
Yeah, no. So we're going to be room temperature superconductor roundup coming at you every Friday with our really deep domain expertise on the topic.
Oh yeah, I'm gonna become like a PhD professor in 1 week.
Yes,
as every crypto person ever does with kind of news like this.
Love it. So yeah, just some fun stuff. And look, at the end of the day, it'd be nice if these mega funds bought something on secondary markets, but they never do.
No.
That stuff takes a while.
If they just bought Bitcoin or ETH, I mean, the whole, like, if they all just collectively like put 50% at least in Bitcoin or ETH the entire time, they'd be up so much more. But they have to put it into shit coins that with like a FDV of like like billions. Yeah, I don't know. They like the whole VC space in crypto is just something else.
Don, stop complaining. Go get your eyeballs scanned, and then we can be friends. We can be WorldCoin buddies.
Yeah, $50, right?
Something like that, dude. Incredible stuff. SEC official warns accounting firms about legal liability for crypto audits. So this is an interesting one because it's not the audits of like smart contract, CertiK type of thing. It's more about sort of proof of reserve oriented things. And so they're essentially warning accounting firms that work with crypto clients, saying auditors could be held legally liable for misleading public statements made by their clients. So that's not great. I think
it's gonna nuke all the auditors, no?
Yeah. I mean, it's hard enough to get like a proper reputable auditor to work with a crypto company because they're all black boxes and are reluctant to open up. The best we get, which isn't particularly great, like in Tether's example, we'd get like attestations, which are significantly different from audits and don't have the same rigor, is my understanding. And you can sort of direct attestations in a way that you couldn't do with audits. So, that's an imperfect system. Even with proof of reserves, that shows you assets. It doesn't show you liabilities. So
Which
whatever
is
number
pretty
you're
much
getting,
useless.
yeah, pretty much useless. You're still taking it on good faith that, you know, the reserves aren't being lent out and they're not sort of pledged as collateral for any side agreements or market making agreements or anything of that nature. So that's not great. I think at the end of the day, you simply cannot rely on the spoken words and statements provided by the exchange, even if it is sort of technical as far as proof of reserves or whatever else goes. And you should be maximally cynical and therefore only spread out your counterparty risk when it comes to centralized exchanges, and only have the amount of capital you need to trade at that venue and no more. Some exchanges do it better than others. Obviously, we have a conflict of interest of sorts for talking about this. We're sponsored by an exchange, WooX. I think they do it better and more honestly than most, often to their own detriment, because it's easier not to show the ugly side than to show it and try to explain it, right? So most exchanges go down route one. They've chosen route two, and that's proven to be tricky. And again, there's all sorts of fee revamp stuff and designated market maker programs to move away from it. But nonetheless, even with Woo, where we have a conflict of interest, I don't think we would advise anything other than only keep the minimally necessary if you're going to use it, if you're comfortable with the counterparty risk. If for some reason it ticks all your boxes, still use the minimal amount you need for your trading in that one specific venue out of many and no more. I don't think our views on that would change regardless. So yeah, that's just part of being crypto. So much offshore stuff, all these places are black boxes. Some are less black boxy than others. But relying on like audits, attestations, proof of reserves, they might shift the needle, but fundamentally, I think not enough to get you to take on more counterparty risk than you ordinarily should. So,
Yeah.
And if anything, if we've learned anything over 2022, you should be maximally cynical about these statements and assurances made by centralized exchanges. Genesis said they were fine after FTX, and
I mean, the funny thing is, right? Like a lot of the stuff that the SEC says actually makes a lot of sense. It's just they're doing it in such a dumb way that you cannot take them serious.
What they say can be quite reasonable, but then the actions of
Yes.
sort of rule making by litigation is terrible. So yeah, that's probably the disconnect there.
But I mean, like I wish crypto was in a state where not only the SEC, like what they were saying, but also like their actions were both bullshit, right? But you cannot really like it's very, very hard to just be like, nah, they're just unfairly going after crypto, because to be quite honest, like we deserve a lot of what we get.
Sure.
It's just how it is. Now they're obviously still going unfairly after crypto, but can you really blame them? And my answer to that, honestly, is just no. You cannot. Like, too many people got screwed over, and too many high-profile scammers have been born in this space / have been doing their shit in this space, and get celebrated for it until they come down, right? Like, it's not like there's a million scams out there still that haven't blown up, that eventually will blow up, where people are like fanatic followers and very happily typing away how great these people are, while they're kind of just doing shady shit left, right, and center. So like it's very hard for crypto to get away from that. I think like that whole like just criminal behavior is like surrounding us everywhere. People don't really care about the laws, and that is a little bit by design, right?
Sure.
But yeah, I'm not surprised that we're in the crosshairs of pretty much everyone.
Especially at this moment in time, like 2020. I know we spend all of our, well, I do. I can't speak for you, but I spend all my time on like crypto Twitter, crypto stuff, whatever. It hasn't even been a year since the year of fraud and crime and blowups. In the real world, that's nothing, right? Like if you're on crypto Twitter 24/7, you might think the whole Doquan, FTX, Genesis, all that saga was well in the past, and prices doubled since then, and so on and so forth. But in the real world, where the wheels of justice move slowly, almost no time has passed, and that's still very fresh in the minds of regulators, lawmakers, and so on and so forth.
Yeah, I mean, if you just think about it, like BitConnect just got basically, that was very recently, like the whole the case basically came to the public very, very recently.
Yeah.
People that trade crypto nowadays don't even know what BitConnect is anymore. Yeah. Like most people, like that's the 2017-16 generation that knows about BitConnect still. The people that came after, like they don't even know what it is, and it's now in front of like judges. So that's how slowly it goes. And I think we're going to have the next 5 years, we're going to have stuff come up from the last year still. As in, like, I think a lot of these scams that blew up and the scams that didn't blew up yet, that's going to be in the media for the next 5 years. So we're gonna have a little bit of a runway of shitty perception of crypto, just because so much shit happened in 2022, basically.
Let's just hope the prices are better during that time, Don, because nothing makes for a good distraction like good price action.
Oh yeah.
Experience. So
if number go up, crypto's good again.
All is forgiven. Yeah. Cool. That's all I had. There was a final article about partisan politics and DC stablecoin bill, but it's boring. We all know that it's quite firmly across party lines now when it comes to crypto. So I don't think we're going to spend any more time on the fake dichotomy of red and blue in the US. We've talked about that enough. And that's all we have for this week. So thank you for listening to the show. Before you leave a like on the video, subscribe to the channel, maybe leave us a comment. We go through them and respond and really appreciate all the interactions. As always, the show is brought to you by Woo. Even after all our FUD about centralized exchanges, go read my long-form article, check out their transparency dashboard, check out their execution dashboard, and see if it's one of the venues where you think it might make sense to do business. If so, using our link supports the show. You could also not use it. It's your life. Do whatever you want. That's all from us. Don, thank you, and we'll see you all next week.